Hello and welcome again to Stocks Advisor. Today we'll talk about FuelCell Energy Incorporated, ticker name FCEL. A quite famous stock, also attracting a lot of attention. Now it's behaving quite positively and trying to go really a very big upwards, let's say, levels. And actually what it's trying to do here, if you demagnify, you can see it's testing here moving average 200 degree, the red line as a resist, and trying to pierce it further actually and really go to the level of 10 if possible. If this is going to happen, it can be very bullish stock, very positive, but also what might be happening here is actually, so instead of piercing it through and going all the way here upwards 10, it might be actually kind of a double top and rejection as we saw in the price action in March. So this is a very tricky moment here. It could in general go either way. Of some indicators say it actually wants to pierce through, because moving averages 20 and 50, the green and blue lines here correspondingly, they are very accelerative upward, so their second derivatives are very big, so it's very accelerative, positive and very big, so it seems like it really wants to pierce through. On the other hand, MACD histogram, it's not clearly formed, it's a very small one, and it might be that actually it might go for secondary negative wave or be a little bit positive and then start a negative wave, which would actually form, then it might form actually a big decline. So it's a little bit unclear, but overall, let's say it's more bullish than bearish, so we can make our trading strategy here based on more positive output expectation. Also, you can clearly see we had here a very nice kind of double bottom. It was a little bit with angles, but still is very positive. It played well, but now the question is, will it really play like this? Will it really play like that on the rejection, or with some rebounds from here? So for the third support, it will go up. And actually this one scenario, if we now delete all these lines, this scenario where we'll bounce down and higher looks very promising, very possible one, because also we can clearly see this level being formed, another one, so looks like kind of a flagging situation. So it either will use this line as a support and then rebounds, or if it pierces, actually can go quite low. And that's how we will define our trading strategy. So first we will bet on rebounds. If not happening, we will think of how to average down to play on the safe side. So with this being said, the levels to buy would be this, let's make it dashed line, as a support, and a little bit higher as an entry opportunity, which will be defined by this level. So anything below 425 and this descending dash line would be the first entry. So let's put it with our actually kind of box. So this would be the first entry level. If we don't rebound, again, I would sell then in the vicinity of moving average 200, because it will be already quite good, up more than 10%. But if you want to really take a chance and wait for higher levels, the next nearest resist line would be here, and the highest resist line would be around 10. But I wouldn't do it. I usually don't play that long, just very quick technical, but it's up to you. It's still possible levels. If we reject from the first box and we go lower, then exactly we should wait below this line, the dark line, because this line will become next support level, but it might be pierced further. So this will define our second entry opportunity here, again with this one on top and actually this level being on bottom as support line. So this lower triangle will be our second entry, and here we can therefore put actually another box to buy. So this is the second box to buy. And then if we demagnify to define the lower level, really like if we have kind of a doomsday scenario and everything goes very low. So this would be it, defined by the price action in July, October of previous year, and this would be anything below 212 and 259, which will make our third entry opportunity. When we speak about entry opportunity, it doesn't mean that we expect the price to go that low. It's just the risk profit, let's say, mitigation and balancing out. Usually it's the first technical, second technical, and the third technical levels that we discuss, and we of course want to be positive on the first level, let's put it this way. But if not happening, then we just buy lower and lower. And here I would play a little bit on the safe side. So if you want to buy non-linearly averaging down, it's not 5 but 6 portions play. Usually it's 5 at our channel, but this time it's 6. So you buy with 1 portion at the first level. If it goes lower to the second level, you keep 2 portions to buy through. And if it goes to the third box, just keep another 3 portions to buy through slowly, because it's quite fastly moving one in both directions. And if it really goes down, we want to be on the safe side of the trade. So when the rebounds take place, finally we make profit, and also, of course, definitely will cover our losses from previous levels. So with this being said, that's the way to trade with FCEL, with the most safety mitigating way. If you like this way of trading, this way of non-linear averaging down and defining the levels, don't forget to subscribe to our channel, press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks. With this being said, good luck with FCEL, and see you at another episode of Stocks Advisor channel.